Hi, this is Amaury Hernandez with List to Sell. I am the certified real estate specialist for seniors, and I cover everywhere from Long Island to the 5 boroughs. List to Sell has been around for quite some time, and we thought that today would be a great way of just answering some questions that people may have with regards to reverse mortgage. So for that, we have a reverse mortgage specialist. Tony Smalling is here with us today.
Yep.
And he is with Opulence Home Equity. And he's going to dispel a lot of the uncertainties about reverse mortgages. And he's going to be able to break it down so everyone has a better understanding of how it works and if it makes sense for them. So, Tony, welcome.
Thank you very much. Thank you.
And you are officially our first guest.
Nice.
So that's an honor.
Nice.
For you as well.
Absolutely. Thank you.
Yeah. So I want to get right into it, Tony. So I want to talk about regards to reverse. So what is a reverse mortgage?
So reverse mortgage is for senior citizens age 62 and older, and that is FHA loan, and it's insured by FHA. We also have other products that don't require you to be 62 years old, like in some states, age 55 and older. So if somebody was to call me and tell me their situation, I could look it up to see if we can get them a reverse mortgage for someone that's younger. And I've done it for all ages, from 55 on up to, I think the oldest client I ever wrote up was 98 years old.
Okay. So there are no age restrictions, then, correct?
Just that the minimum ages are.
Okay. So which is
the
state?
As a borrower, it depends on the states exactly, but as early as 55 years old.
Okay.
Yeah, and then sometimes the borrower is 62 years old, but the wife or the spouse is younger, so we could still work up to see how it works out as far as numbers if it works for them.
Okay.
But they're going to go by the youngest age, and then, it's a FHA insured loan.
Okay, so insured, what does that mean exactly?
So that's a great question. So an FHA insured loan protects the borrowers and the family. And what that means is that, let's say, for example, they get the loan, they're 60, mid 60s when they get the loan.
Right. And
let's say one of the borrowers is 59 years old, but they want to get the reverse mortgage now, okay?
Okay.
One's 65, one's 59. They live to be, in their 90s. And let's say their home balance is 1.1 million.
Okay.
And they do an appraisal on the home, and the home appraises for $1 million. So it's more on the balance. Nobody wants to pay more than that. So FHA is insuring it. They're going to pay the difference. So they would only pay, the maximum they would pay is 95% of the appraised value. So in this case, they would pay $950,000, and they would be able to keep the home.
That would be a family member.
That would be whoever their heirs are.
Okay.
We don't delegate who their heirs are, but it's up to them to do all that.
Okay.
Yeah.
Okay, so the insured part is that no matter how much over the balance might be,
correct,
compared to what the value is,
right,
that's where FHA says, okay, we're going to insure that amount. Don't worry about that amount.
Right.
You're going to get 95% of whatever the property value is.
Just unless the balance is lesser, whichever one's lesser.
Right.
And then also the one that's under the 62, like this example, 59. That person is what we call an eligible non-borrower. And what that means is that they're eligible to stay in the home for the rest of their life. So if the husband that's 65 passes away at age 90 and the wife is still living in the home for another 10 years, it doesn't matter. She's locked into the loan as one of the eligible borrowers to stay in the home.
Okay.
And once they're both gone, now the heirs have the opportunity to either sell the home, keep the rest of the equity, or they can, pay off the loan if they're fortunate enough to have the cash. It's up to them what they want to do with it.
So breaking down the reverse mortgages a little bit more.
Okay.
So what payments are required with a reverse mortgage?
So
what payments are not?
There's no requirements for principal or interest payment on the loan itself.
Okay.
You are obligated to pay the property taxes, the homeowner's insurance,
Okay.
and to maintain the home. Yeah, and
So that's the only thing that the homeowner has to pay for
that's
is
what
the
they
property taxes and the homeowner's
and to
insurance.
maintain the home. That's important,
Okay.
because like for example, I had a client years ago in South Carolina, and they were getting cited by the city because they had too many cars on the side of their house, and it wasn't, and it was a what do they call it, eyesore.
Okay.
So they were being cited. Well, you know what? They're going to throw a lien on the house, and that's going to be a problem.
Okay.
So you got to fix it. You got to take care of all that stuff.
Okay.
Yeah.
Right. So they want the
But
house
that's
to
with
be
any mortgage, even though regular somebody that's making payments, if the city's going to put a lien on the house, you got problems.
right.
Yeah.
Right. So basically, you have to make sure that the house is well maintained, and of course, the lender is interested in making sure that it is. Right?
Absolutely. Yeah.
So talking about lenders, there's a myth out there. So let's get right into that.
Okay.
And that is that if you get a reverse mortgage, that eventually the lender's going to take over the house. Is that true?
No, we're like a lender. That's basically what we want. We just want our money back and interest and all that that we are deserved back. Just like your regular mortgage on that you're paying payments on. There's no difference. I mean, if they both pass away, and they owe $350,000 on the mortgage, that's what the family has to pay off or satisfy.
It's just like a regular
It's
mortgage.
just like a regular mortgage, and if the balance is, 500,000, well, shoot, they lived there, they had this mortgage for 25 years or something, and they die, and then now the loan becomes due. It's just whatever the balance is, or the appraised value, whichever is lower.
So the heirs have the opportunity
Absolutely.
of either, if anyone is interested in getting the house,
Right.
they will get considered, I guess, the first shot in getting it.
Absolutely.
And then if everybody says no, we prefer to
Then they
sell
could
it.
sell it.
Then they could sell it like if it
Right.
was a regular mortgage
Right.
and pay off whatever the balance is.
Right.
Okay.
And to be honest with you, the family doesn't even have to do anything. If they owe more than the value, for the example of 1.1 million, and the home is only worth 1 million, because that's what it's going to appraise at, then they could just say, you know what, we don't want to hassle it, just walk away and let the bank handle it.
Okay.
That's where people get the myth. Another thing is that when people don't pay their property taxes, they have the misconception that the reverse mortgage is taking their house because it's a reverse mortgage, not because they didn't pay their property taxes. But any mortgage can do that. They're going to foreclose on you if you don't pay your property taxes.
Right.
Yeah.
Yeah, and that's where you have to actually worry, where the town itself might actually take the house instead of even the lender. So the lender doesn't
Right.
want that to happen.
We just don't want the house taken away from the city when we
Right.
have this lien on it.
Yeah, one of the things that I find that's great about a reverse mortgage is the fact, like, unfortunately life happens. And let's say married couple, one of them passes.
Right.
That's already a life-changing event. But just knowing the fact, and people might say, well, it was depending on that income, I don't know if I'll be able to stay. The great thing about a reverse mortgage is that now that person, the spouse that remains alive, is able to stay in the home without having to worry about, can I afford to make the mortgage payment?
Right.
That's the beauty of the reverse.
Right.
Is a reverse mortgage for everyone?
No.
Okay.
It's not. Not everybody needs a reverse mortgage, but most of those are financially okay. They went through life, they saved, they have this great big retirement check, or they have, different types of investments and things, and they're secure that way. But some Americans don't get to retire the way they wanted to. They planned it out in their head, but every time you turn around, something else happened, whether it be an illness or whether it be a death in the family. But a lot of my clients that are calling in, they have some situation, and not always do they want to tell you what it is,
Right.
But as you ask questions, if you ask enough of the right kind of questions, you'll get down to the bottom line. I have $60,000 in credit card debt. I messed up. But my husband passed away, 2 years ago, and now it's catching up with me, and I lost his Social Security check at $2,200 a month. That's like almost $25,000 a year. So now they look at the reverse mortgage to bail themselves out and to have like a backup plan. Maybe they get a line of credit to where if they need a new roof, they don't have to worry about it. Where am I going to find this money?
Right.
So
So
I always suggest that they try and not to get back into that same situation. Let this be the reset button to where they don't get back into that same problem.
So that being said, if I'm not mistaken, I think there's different ways of getting a reverse where some people might get everything at once, or they might say, you know what, I feel more comfortable just getting a monthly income. Now that I lost my spouse's income, there's a way I could supplement that with the reverse. That would be great. It will allow me to age in place, stay home.
Absolutely.
Is that true?
Yes, it's customizable to where whatever their needs are, we try to help them accomplish that. Um, and that's where I come in. I'm going to look at their whole situation and make suggestions in the right direction. If the husband's gone, they don't have his income anymore, and they need more income, let's fix that. Let's get you a monthly income that's going to be based on your life expectancy. Some people actually go into a reverse mortgage, husband and wife, and they want $1,800 a month, even though the life expectancy would have been $1,000 a month. They say we need $1,800, and they know it's only going to last them for 9 years and a few months. So that's their option if that's what they want to do. And I've done that for people before, but I also, kind of throw my input in there. But it's typically up to them and a lot of times. Okay. And sometimes what we'll do is to help them out a little bit further, what we'll do is we'll apply the life expectancy set aside if there's enough money within the loan. This way it pays for the property taxes and the homeowners insurance. Not only do they not have to make a payment, they don't have to worry about the payments for the property taxes and homeowners insurance.
For how long?
Say it's based on lifetime expectancy, and some people outlive that. So if you're not paying taxes for 18 years and that money runs out, then you'll be responsible to pay the property taxes and insurance, but that's at that time. A lot of people don't reach that.
And that's called set aside, is that?
It's called, it's LESA, LESA, life expectancy set aside.
Okay, great.
Yeah.
That's great. So what are the requirements for a reverse mortgage?
So besides the age, a lot of people have the misconception of that you don't have to have income. Well, it might be very low. I've actually gotten people a reverse mortgage and didn't have income, but their bank account showed that they had
Significant assets.
$350,000. Not only that, but the proceeds from the mortgage maybe is another, $400,000. So we could take those numbers and calculate what in replacement of the income that would be a match. So if you don't have income, it doesn't mean you won't get the mortgage, but there's got to be other things that go with it. You have to have a big line of credit. You have to have other, cash. But sometimes people call in, they only have $1,000 coming in a month, and they have no nest egg, and their mortgage is so high. So those are people that won't be able to get one if it's out of the criteria. They have a home that's valued at $500,000. They're 65 years old and they owe $400,000. They're not going to get a reverse mortgage. But somebody that calls in and says, "Oh, I got a $150,000 mortgage, and the house is worth $600,000, and I only bring in $1,200 a month. Am I going to be able to get this?" Well, let's talk about it.
Wow.
They have $400,000 in their nest egg. You're going to get
That being the equity you're talking about, right?
No, I meant their nest egg is their cash.
Oh, okay.
Maybe they have some kind of investment and stuff like that they can prove that they have. That counts as income. Yeah.
Oh, okay.
Yeah.
I see. And I would guess also the lower, let's say the loan to value, talking about real estate aspects, right? So
Right.
the loan to value, the lower it is, the more favorable it might be that
Absolutely,
the person could qualify.
Well, it depends on their age. I mean, I've seen people in their 90s get up to, a lot of it, So if they have a $1 million home, somebody that's 95 years old might get 700,000 or maybe even more.
Right.
Whereas somebody that's 65 years old might only get 300,000 or something. Yeah.
Any other requirements? Do they have to go through any type of classes or anything like that in regards to getting a reverse?
Absolutely. The requirements are that they have to be counseled.
Okay.
And the counseling is to make sure that they understand, because we're working with seniors. They're 62, they're older. Some of them are in their 80s or whatever. You just want to make sure that they understand it. And if they understand what they're doing, it's not like, usually it's not like a grade. Like, you're not going to get, oh, they got a C. No,
Right.
no, it's just, basically it's a formality. They're going to tell them about the loan. They're going to find out what they understand about the loan and make sure that they understand their rights and what they're obligated to do. Pay the property taxes, the homeowner's insurance, and maintain the home. And just to protect them. So this way they don't say, oh, I didn't know that.
Right.
Yeah.
So the counseling is mandatory.
It is. And they even give a certificate. And with that certificate, we put it in their loan file, and that's when we can generate an application for them to sign.
Okay.
And that gives us the right to start working on their file to start putting the loan together for them.
Okay.
Yeah.
So, in speaking about the loan, normally what is the time frame as to when they initiate the application to when they are able to close?
So typically on an average of about 4 to 6 weeks, but sometimes it's a little faster. Sometimes it takes a little bit longer. Like, for example, we do, I love working for Opulence. I have so many more opportunities now than I have in the past.
Okay. Like what?
Like, for example, co-ops. I've never done a co-op before, and now I've got clients like that.
Mm.
I've never done a condominium that was not already on the HUD list approved, FHA approved HUD condominiums associations.
What does that mean?
So a condo association, if it's not approved by FHA and on their list as approved and have an expiration date on their website, then I used to say no all the time. We can't do it. But I could fill out a form and see if our department that works with FHA or with the HOAs, the homeowner associations, to try and get them approved. But I never got one that was approved, and that was with a big company, Tom Selleck commercials.
Right.
But they never approved one. And I worked on them, sometimes we working on that for months with the client and getting this information. Here, at Opulence, we have a team of people that know how to fill out the paperwork properly to do a single unit approval.
Wow.
And so what we do is we know what to do and how it works. We work directly with the banks. We have a great communication with banks. I've never seen a company like this before. That's why I'm happy to be there, because I could say yes more often. If the loan might not work for FHA, we have proprietary programs that might be able to fall within the guidelines. And we know all those guidelines. We have people that know all the ins and outs of that. Whereas other companies, they only do a few loans a year, and they don't know what those guidelines are. So they're saying no. Then they come to us and we say yes. I've done it before. I've been told no twice, and you're saying yes. What's the difference?
Mm.
Then we break it down for them, Well, 2 years ago, they didn't accept this amount, but now they lowered the limits and it's acceptable. Well, they didn't know that because they just told them no.
Wow. So it sounds like you're with the right company.
I am.
That's great.
I love it.
That's great. Providing solutions. That's what it's all about.
Absolutely. Helping more people.
Absolutely.
And, that's what helps me sleep at night. I'm doing the best I can to help people to stay in their homes. Just recently, we funded a loan in the Bronx. Unfortunately, her husband had passed away a couple years ago. She'd been in her job for 25 years. She's a hardworking woman. Here she has this beautiful 2-family home in the Bronx, and she's going through foreclosure. She couldn't afford the payments.
Wow.
So we not only were able to do this loan, but we navigated it through a very difficult time, because they had that home for sale that day. It was going to the court. We had somebody at the court to try and tell them, no, the loan is funded, blah, blah, blah. And we're trying to get a hold of the attorneys, and we got a hold of the attorneys. We gave them the approval number to show them the confirmation number, and they weren't seeing it. And then finally they they got it funded, and it was all shut down. They decided to go ahead and wait on the sale just to reschedule it. The loan was funded, and this lady was so pleased. I mean, so pleased.
Talk about changing people's lives.
Right?
Wow.
Right. And if it wasn't for that, not only would she have been out of a home, but she wouldn't have any cash, and there was some equity in it, so it's
Right.
wind up she would have lost a lot of money.
Wow.
Yeah.
And been displaced out of the home that she's been in
Right.
for years.
Right.
And then
Exactly.
having to move into a place that's,
When somebody loses their spouse, they don't always think of, what else do I have to do? Sometimes they're lost.
Right.
Unfortunately, I know that myself. For about 4 years after my wife passed, I was lost. So I can relate to these people, I think that's what helps me to work with them. And that's what drives me, I want them to be okay, and that's what's important,
yeah. So I'm going to ask you, what sets you apart in what you do for people with a reverse mortgage?
Opulence really helps me do what I do best, and I feel good about where I'm at, that I'm able to help more people now.
That's great.
Yeah.
All right.
Yep.
Well,
Definitely.
I wanted to take the time to say thank you for being here and for
Absolutely.
sharing your amazing amount of information that you have with regards to reverse mortgages. If you have any questions that you want to ask Tony or myself, then feel free to send us an email. And the email that you can send me is the word team at list2sellny.com. We're also going to put that on the screen, so that way you'll be able to reach out to us if you have any questions. We'll be more than happy to answer them. Or if there's any topics you want us to go over, again, we're more than happy to do that and provide the information to you.
Can I give my contact information too?
Absolutely.
So my email is asmalling@opfunding.com, and my number is 201-699-5053.
Right.
And we also have an 800 number, 800-610-0293.
All right.
All right, thank you.
You're very welcome. Thanks for being here, Tony.
Thank you very
Appreciate
much.
it.
Okay,
All right.
sounds good.
Bye-bye.